Hey there. Happy Friday, Craig. I'm doing well. Good morning. Looking forward to an eventful weekend and an eventful day, actually. I've got my, I'm playing in a celebrity, no, not really, a charitable golf tournament for raising funds for cancer today with some of our real estate partners. So really looking forward to it. So,
That's an awesome event. Have a good time.
yeah,
I
yeah.
I'm not a good golfer though, but
Yeah, yeah.
you
Well, I'm
you
not
you
either,
can
but that's okay.
you can hit
Yeah.
them for me. So there you go.
Yeah, yeah, you hit 'em straight. That's always the key phrase. So,
Yeah.
well, welcome to the South Florida Mortgage Report. I'm your hat dude wearing mortgage guy, Billy May. We've got our Capital Partners president, Craig Garcia, with us this morning, as usual. We're the mortgage team, and it's funny, Craig. I was thinking between the two of us, we've got like what 50 something years of mortgage experience. you know, you know. It's kind of crazy. I see that a lot with realtors. They have a team like we've got 195 years of real estate experience, or whatever it is. So it's
Yeah.
yeah,
Yeah.
but we got a big lot of experience. So we want to talk about, as usual, we're going to talk about three things, right? Mortgage rates. We're going to talk about where are they, where are they going. Secondly, about kind of like the federal government shutdown, how that's affecting our industry and mortgage rates. And lastly, we're going to talk about the 2-1 rate buy down because we're seeing so much of it and there's some confusion out there. We want to kind of show the benefit to our realtor referral partners and to potential home buyers. So,
Sure.
yeah. So, the
So what's
Freddie
going on
Mac
with
survey.
rates?
What's that, Craig?
What's going on with rates?
Yeah, the Freddie Mac survey came out and it says kind of 6.39% average for the first time in a couple weeks has trended slightly downwards, but that's kind of been like this for like what the past, I don't know, 4 or 5 weeks, right, Craig? Like kind of been in that, 6.5, 6.4 kind of range, right?
We've been in a bit of a range. Yeah. The economy, the people think the Fed are wanting to lower rates, but they are going to be a little bit data dependent and see how these reports come out. Which, kind of leads us into topic number 2 is that the reports are not coming out right now
Right.
because the government is shut down. And so,
Yeah.
the non-farms payroll report still hasn't been released. There are other things that there's still some economic reports coming out. There's a consumer sentiment report coming out today, but that's not usually the big market movers. So the big ones, they won't get released until this shutdown gets resolved, and hopefully we'll see that happen soon.
Yeah, I hope so. It's, you watch the news and everything, and there's always a couple of different sides to the story. I would think it'd get resolved pretty soon here, but I guess we shall, we'll play the wait and see, basically.
Yeah, for sure.
And another thing I had read yesterday is we always talk about the Federal Reserve doesn't always influence mortgage rates, but I guess the meeting minutes from the last meeting were put out there and so forth. And they were kind of reading into it, and they were saying that it's really housing is really something that the Federal Reserve is talking about, and the president's actually kind of floated the idea of some sort of national housing crisis or something of that nature to because the administration wants to see housing get more. We're kind of been slower the past few years. They want to get some activity going and make it more affordable for your average first-time home buyer, and then we're going to talk about a product, kind of segue into that would
Sure.
help our average first-time home buyer, the 2-1 rate buy down.
Yeah. So what I thought we would take a couple minutes and go through and look at some of the numbers and an example on how this works and why it's become very popular. So I'm gonna share my screen here.
Yeah,
See.
whenever I try to explain it to the borrowers and our realtor partners, it's kind of nice to put it to where here's the numbers, here's the data. We have the spreadsheet and it kind of shows them exactly how it
Sure.
works.
So we have a little tool that kind of helps us look at this. And the way I like to kind of frame it is, let's say you're a buyer, right? And you were gonna buy a property for $600,000, and I just plugged in a rate, kind of like the market rate today. And if you were gonna put a 20% down payment on the property, your principal and interest payment on your 30-year fixed rate mortgage would actually be this number down here, this 2971, right? And what a lot of people will do when they get into a negotiation on a property, they're obviously trying to negotiate the lowest price. And what some people might be kind of surprised to find out is like if you were to negotiate, let me scroll down here. If you were to negotiate an $11,000 price reduction, so instead of buying it for 600,000, you're now buying it for was that 589, right? If you're that buyer putting that 20% down payment because you bought it for $11,000 less is going to be $54 a month lower, which is not a lot, right? So what's happening with this 2-1 buy down is, and I'll kind of tie it back into this price reduction, is the 2-1 buy down says, hey, if your permanent rate on your loan is 6.3%, for the first year, you're going to get 2% lower. That's the two of the 2-1 buy down. So you're going to get 4.3%. And then the second year, you're going to get a 1% discount. So it's going to be 5.3%. And then years 3 through 27, you're at the 6.3% that we started with. Started talking about. And so what happens is that difference in the rate, that 2% difference in the rate the first year saves almost $600 a month.
That's
It's
huge.
definitely, it's like
Huge.
10 times
Yeah.
the difference in the $54 a month by negotiating the lower price, which we'll tie in a second. The second year, you're saving $300 a month. And then you're back at that permanent market rate of whatever it would be today. And the reason I put the $11,000 price reduction in there is that the cost, and when you negotiate right now, which the big difference of, many years past, these 2-1 buy downs have been around forever. But what's happened is before now, it's been a long time where it was kind of more of a seller's market, and it
Oh
was
yeah.
tough to get sellers to negotiate price concessions, closing cost concessions.
Yeah.
Or sometimes you were up against 5 other buyers to try to buy the same house, and the
Right.
seller had all the cards, you know what I mean? And they
Yeah.
were picking and choosing what offer they wanted.
Of course.
But today, the market is much more negotiable. And
Oh,
so
absolutely. I mean, we've closed lots of these deals. Or, the listing agent will be like, "Hey, we'll entertain that. Why not?" And plus, the values are there. We're not, usually the
yeah.
appraisals are coming in. So
Yeah, so that what it costs the seller to pay for this 2-1 buy down for the buyer is it's really just the exact amount of the savings that the buyer is going to get,
yeah,
which it turns out to be it's just about $11,000,
yeah,
$10,816 in this case. That instead of saving $54 a month, and yes, the $54 a month is the whole time, right?
yeah,
This is more front loaded. I mean, how many buyers have we talked to? Studies show it, and everybody knows, you buy a house, you're going to have more expenses than you usually have when you first get into the house.
Oh,
You're at Home Depot,
absolutely.
you're at Home
It's
Depot every
natural.
week. You know what I mean?
Right.
Yeah.
Right.
So this is a nice way to capture some kind of needed savings up front.
Yeah.
And then if you just out of curiosity, the same tool will show us if you wanted to take, instead of doing a temporary buy down, if you wanted to get a permanent buy down, right? Because you
Right.
could do that too. Because the
Sure.
idea about the $11,000 lower in price is, hey, that $54 a month, even though it's a lot less, that's the whole time.
Yeah.
Well, the other way to look at that would be is, okay, so instead of negotiating that $11,000 lower price, if you took $12,000, you know what I mean? It's about the same amount of money.
Right.
That's about 2.5 points on the loan,
Uh-huh.
and that would get you a permanent rate buy down. So that's not temporary. That's the
Yeah.
whole time. Now you get a lower permanent interest rate instead of
Right.
6.3, 5.75, and that's going to save you $170 a month. So it's like
Yeah.
2.5 times for the same amount of negotiated price, right? In one
Right.
case, you're taking it off the price and borrowing less. The other
Right.
case, you're leaving the price where it is. You're
Right.
you're still borrowing the same amount, but you've got this credit coming from the seller that you're going to use to buy yourself a lower rate the whole loan.
And
So
and, that, and that's not a bad deal either. However, the average homeowner only stays in the house 5 to 7 years. So, that permanent
that's
rate
a good
buy
point.
down, that would be great if you're going to keep that loan for 30 years. I just did some quick numbers. If you take that number, what was that? What 100 was it? How much
100
it was per month, Craig?
$170 a month.
$170. If you did that times 60 months, which is 5 years, that's $10,000. So you're
Yeah.
kind of in the same ballpark. You know what I mean? Is that you're getting the same benefit as a 2-1 rate buy down. Not a bad deal, but if you know for a fact you're going to stay in the house for 30 years, or maybe you're going to stay there for 5 years, then maybe rent it out. That might not be a bad deal either. It's just statistically speaking, most people sell the house in, within 5 to 7 years. So
And I would throw one other thing in there, Bill, is that if you happen to be of the mind that, hey, interest rates are going to be coming back down,
yeah.
the economy is getting softer. You know what I mean?
Yep.
There's more uncertainty, and that might lead to to lower interest rates in the future. if you do the permanent buy down and pay all the points up front, that's you're not recapturing that, right?
That's right.
If you did the 2-1 buy down and during these next couple years, you rates come down a lot, and now it makes
Right.
sense to actually refinance that permanent rate into a lower permanent rate on your loan, then whatever of this savings, whatever of this
Right.
$10,800 has not been used.
Right.
So it's at the end of the first year, you used $7,100. You still have this $3,600 kind of in a piggy bank a little bit,
Yes.
and that money can be used to offset the costs of a refinance.
That's huge. That's a
Big deal.
nice feature. Right.
It's great. Yeah, no, it's really good. That's so if you hear a lot of people talking about these, so what's happening is we see sellers, listing agents who've gotten with their seller and said, "Hey, let's make your property stand out. The other properties in the neighborhood are not offering something like this.
Right.
Let's offer this." And so they're coming out with, and putting that foot forward first. And then what's probably more common is you've got real estate agents who are working with buyers, and the buyers are wanting to get in, but they want this relief, and they want to negotiate what a great deal that they can feel really happy about. And
Right.
so if you're in the market to buy a house and you secure a contract on a property and you negotiate one of these things, and now you get this discounted payment for the first couple of years,
Yeah.
a lot of these buyers are pretty happy about that right now. So
Yeah. Yeah.
yeah,
And, to your point, you're talking about the listing agents, we can give you all kinds of data. We can give you information you could put in the MLS, and it's going to help separate your listing versus someone else's listing. It really, really, really stands out. And it's a great marketing tool. The one challenge that I do find in this, and not the product, but in its presentation, Craig, is speaking with the realtors. Is sometimes when they write the offer, they're not really sure how to write it, how to put it in the
sure.
contract, put it in the offer.
So the simplest way, if you're a real estate agent listening to this, anytime you're negotiating where you want to get a credit for closing costs, it's funny, as long as I've been doing this, we always get that question. Well, how should I word it in the contract when it's just for
Right.
closing costs?
Right.
Usually, the blanket answer that we always give is, seller to credit buyer, X amount of money towards buyer's closing costs and or prepaids, and then you could throw in and or interest rate buy down. So
Great
you kind
point.
of cover everything.
That's
And
right.
and that way, if you negotiated an amount that's more than, what the buy down costs, then the additional money can be applied towards the other closing costs, the typical closing costs.
And that's what
So
I tell my referral
yeah,
partners. I say, listen, just ask for 2.5% of the sales price. Gives a bit of a cushion there. Figure out the dollar amount, put it right in the offer. That's what I've recommended. And then, like you said, the actual buy down is 2.4% of the loan amount. So we know it's going to be slightly different than the sales price. But like you said, they could take that additional funds, might be only a few $100 or whatnot, and apply it towards remaining closing costs.
yeah. So it's a great deal. We've done a bunch of these, and certainly, and with this tool, it's very easy for us to kind of quickly figure out what the benefit's going to be, what the cost would be for a seller. So if you're a listing agent, you're listening to this, and you just need to, you want to find out, for your listing, what that might look like. Just
Right.
reach out to us. We'd be happy to do that. It takes 2 seconds.
Yeah.
So
Yeah. Great
yeah,
stuff. And like I said, we do have some information that we could send you in a flyer. We give you the wording you could put in the MLS and the broker remarks, and it'll help separate your listing from listing down the street. Absolutely, make it more attractive. So that's good
yeah.
stuff. And we're all about supporting our referral partners here, and also doing what's best for the consumer. And this is just a great tool that I think there's a lot of confusion about that out there about it.
Yeah, and there's a lot of questions, and so hopefully, something like that helps, and it's visual. So hopefully that was hopefully people will get something out of that. And if
Yeah,
you want
great stuff.
further clarification, just reach out to us. That's what we talk about that all day long. So
Absolutely. Hit the like button, hit the subscribe button. This is the South Florida Mortgage Report. We are obviously on YouTube on the channel here. We're on Apple and Spotify. You can go right into your Apple podcast and just Google or whatever it is, not Google, but go in South Florida Mortgage Report on there. So if you're on the go, you don't have time to watch, you can listen to us in your car as you're driving to work. And just some great information. So, but yeah, great stuff, Craig. Hopefully, we watch these mortgage rates continue to kind of soften to be nice, and the market stabilize. So that'd be good there. And this 2-1 rate buy down. So good stuff. Any big plans this weekend? We're not going to watch the Miami Dolphins get slaughtered by the formerly known as San Diego Chargers, I guess. And It's just
Yeah, I mean, I think we had our best chance for their second victory yesterday or last weekend. We blew that.
yeah,
But
yeah.
yeah, no, actually, my youngest son had a birthday this week. We're actually going up to one of the little water parks up in Orlando, and just for a
Nice.
little day trip.
Oh,
So
cool.
yeah, should be good. Should be
That
fun.
sounds like a blast. We're having a family reunion this weekend with Cammie's family,
Nice,
so it should be a lot of fun.
wonderful.
Yeah,
Enjoy
yeah.
that.
This way I don't have to watch any football. Hey, I'm busy at the family reunion. I don't want to watch any football.
Yeah, yeah. Sounds
All
good.
right. Sounds
Well, have a
good.
good
Well,
one, sir.
great information. And remember, as always, we will see you at
At the closing
the closing
table.
table. Right on.
All right.
All right, Craig.
Bye.
Have a great weekend.
You too.
See ya.